welcome to the Duke of Scotby Studios here in Geneva. I'm joined today by John Sandwick from Safa Investment Services. John, pleasure to have you back.
Well, it's a pleasure. Thank you.
So today we're talking about Islamic financial growth. So you've been speaking about Islamic finance for the past 10 years. During that time, there has been some changes. So Islamic finance assets went from $200 billion to almost $2 trillion now. So what is it about Islamic finance that propels such phenomenal growth?
Well, Islamic finance's growth may seem big when we look back over the last 10 years, but just wait till you see what happens in the next 10 years. We're talking about a quarter of the world's population being Muslim. And it took a while for Islamic finance to perfect the structures of something that could be really called Sharia compliant, whether it was a bank deposit or a credit for a business or credit cards, or more important, capital markets financing for businesses and governments. If you will, Islamic finance has needed time to generate the structures and the systems and procedures that would be both efficient in terms of financial intermediation and respectful of the Sharia. When you think about the Muslim world and the 1.2, 1.4 billion Muslims on the planet, you think about a group of people who generally, as a group, have very high savings rates. Americans have often zero savings rates in their economy. But Muslim families, whether they live in Indonesia or India or Texas, they have a higher savings rate, sometimes as high as 25% of household income. So when I say that we're going to really grow next from about $2 trillion in assets in the Islamic financial system, just wait for the next 10 years. You're probably going to see going from 200 billion to 2 trillion, and in the next 10 years, maybe to 20 trillion.
So we've also read some of your frequent comments about the uneven development of Islamic finance, in particular asset management. So how can industry change its focus and give equal resources to all parts of Islamic finance?
Well, as I've mentioned often before, banking is broken into many different sectors. And I like to explain that banking is really broken into 5 pillars of activity. You have retail banking, commercial corporate banking, investment banking, which includes project finance and venture capital and private equity. You have brokerage and trading banking, which is the clearing and settlement of securities between buyers and sellers. And the last one I call asset management banking. And in the first 4 areas of development, the Islamic finance community has come up with world-class systems, processes, procedures that makes an Islamic finance facility for a customer really identical to its conventional counterpart in terms of service and price. The one area of banking that has never achieved a great evolution in the Islamic finance universe is asset management banking. Still today, all of the Sharia-compliant mutual funds on the whole planet are maybe $55 billion. Now compare that to the $32 trillion of conventional mutual funds that we see in the world today. So asset management banking, Islamic Sharia compliant, has a long way to go still.
And recently you spoke at Thomson Reuters Global Islamic Mutual Fund Summit. So tell us about the newly released Thomson Reuters World Islamic Funds Report. So I understand there was also some important conclusions there as well.
Thomson Reuters, probably more than any other financial data news organization on the planet, has more interest and support for the Islamic finance community than almost anybody else, really. And Thomson Reuters, for the 3rd year in a row, has come up with the Islamic Asset Management Report. This is not on the general Islamic finance industry, it's specifically on Islamic asset management. Thomson Reuters looks at the existing universe of Sharia-compliant products, from Murabaha money market style funds to sikik Islamic bond funds to equity funds and to alternative investment funds. And they say, look, given the size of the Muslim community worldwide and the size of their savings and the size of banking systems in countries that are predominantly Muslim, we see 55 billion in assets in the Islamic mutual funds industry today. That's what is. But they say what should be, as the Muslim world achieves global standards in financial measurements, what should be is about 170, 180 billion in assets. And so Thomson Reuters concludes that the the next few years should see an explosion, a massive growth of the number and size and diversity of Islamic mutual funds. This is revolutionary for us because we're Islamic asset managers. We need more products, more choices, more selection to do our job well. So this is a very welcome conclusion in the latest Thomson Reuters Islamic Asset Management Report.
And you mentioned Sukuk there, or Islamic bonds, which have been in the media a lot in the past year. So we see Britain, Hong Kong, South Africa and Luxembourg all issue sovereign Suk. So what is next in the Sukuk pipeline?
Well, Sukuk, first of all, is a Sharia-compliant fixed income instrument issued in the same context that a company or a government would issue a bond, but there's rules. To make it Sharia-compliant, a Sukuk, Islamic bond if you will, it must be tied to true physical assets. They do not accept what we call full faith and credit guarantees, like what you saw with the government of Greece, and you saw what happened with those full faith and credit guarantees. With the Sukuk holder, the person who buys the security, has to have a direct line of sight to the underlying hard physical asset. You can't just sell promises. You have to sell true assets that produce cash flow. When we saw the British government last year, June 24, 2014, issue 200 million pounds of Sukuk, the world witnessed something extraordinary. It was 12 times oversubscribed. There was 12 times more orders than there were Sukuk to fill those orders. And you have to think to yourself, what kind of demand does that reflect? It reflects enormous, huge demand. I mean, we never hear of any other kind of bond or security getting 12 times oversubscribed. It's maybe 1.5 times, maybe 2 times, maybe 3 times, but not 12. And we've seen similar situations with the South African Sukuk, the Luxembourg Sukuk, the Hong Kong Sukuk. And so we're entering a new era of Sukuk finance. It's legitimate now. Recently, I read a report that said in the next 6 years in Europe, there's a gap of 600 billion euros of infrastructure finance. 600 billion euro gap. Now you remember, infrastructure is all about assets. It's sewage systems, it's toll roads, it's bridges, it's ports, it's railroads. I believe that we're entering a time where the European markets will start considering an alternative to the traditional Eurobond market and start seeing Sukuk as another form of securities from which they can gain capital at global market rates.
Absolutely. Well, John, as always, it was a pleasure to have you here in the studios. Thank you for coming in today.
My pleasure.
Well, that's all that we have time for today, but for further updates and interviews, do check out the Gigascopy website. Goodbye for now.